Welcome back to Trader UK, the money management channel. Today we're going to take a look at another rights issue. In the summer we made a video about Whitbread and their rights issue and how I dealt with that one, where I actually took up those rights. Now we have TUI AG, a popular travel company in Europe, who are offering new shares to the market, to their current shareholders, at a highly discounted price in order to raise some capital. We did say at the time in the summer this would become more commonplace, more common practice, where companies issue new shares in order to raise capital to see them through this pandemic. So we can use today's example to show you exactly what you need to do if a company that you hold performs a rights issue, and more importantly, how you should be basing your decision. Before we do get going anywhere today, as always, I will ask you to quickly like the video for me, and don't forget you can subscribe to the channel for more similar content. First of all, let's go and take a look at what's actually going on, and you'll be able to find the details normally via a notification on your trading platform if you are a shareholder in that particular company. If not, you can find it on the company's website directly. It says here, fully underwritten offering to raise gross proceeds of 544 million, 7th of January 2021, further to the announcements and approval by the shareholders. Announces a fully underwritten offering of 544.6 million. That's what they're trying to raise here through offering 508 or 509 million new shares to the market to the company's existing shareholders. The company's shareholders will be offered 25 new shares for every 29 existing shares that they hold, at a subscription price of €1.07. So that's a highly discounted price per new share. Investors holding depository interest over the company's shares on the 11th of January 2021 will be credited with preemptive subscription rights that will allow them to acquire additional DIs representing new shares at the subscription ratio at the subscription. Okay, so this stuff, the key details here: 25 new shares for every 29 that you hold at a price of €1.07. And it's going to expire on, it looks like, the 26th of January. You have from the 8th of January to the 26th of January in this case to decide whether you want to buy those new shares or whether you just want to sell your rights to buy them. Okay, and we'll take a look at which option is normally best in a second. So basically what we have here is a company that's struggling still due to the pandemic, like all travel companies, all airlines are, I guess. With TUI AG, they've borrowed a lot of money throughout the pandemic, 2 or 3 billion euros from the German government. I imagine one of the conditions of borrowing that money is that they need to exhaust all other options. So they'll have to demonstrate that they can raise money from their shareholders as well, as much as they can, and this is what they've come up with. Now, of course, when you look at it, there is a big discount here. The subscription price is €1.07 and the current market price is over €4, €4.20, €4.30 or so. But before you get too carried away and think you're going to end up making €3 per share, it doesn't quite work like this. Just remember, if a company issues new shares to the market at a discounted price, then it's going to have a dilution effect. It's going to force the share price down because they're putting more onto the market. To work out what that dilution effect is, what we need to work out is called the TERP, T-E-R-P, Theoretical X Rights Price. Now, the TERP is essentially the effect of the rights issue. It ignores all other effects on the market, all the news, all the general trading, etc. If we froze the market right now, we perform the rights issue, what would the share price be? What is the effect of introducing all of those discounted shares to the market? So I'm going to bring up on screen and we'll have a look at a couple of examples. So first of all, on the left hand side here, this is an example of a share issue or a rights issue at market value. So the top line, if you have 100 million shares at £1 each, then the company is worth 100 million. This is before any rights issue. If you then offer them to buy one share for every share that they hold, you'll issue another 100 million shares at the market price, which is £1, and it will raise you £100 million. Now, the company prior to this rights issue was worth 100 million. It's now got 100 million cash, which will go into the bank account. The company's worth 200 million. It has 200 million shares outstanding, which means after the rights issue, the share price will still be £1 per share. That's the TERP in this case. But in the case of TUI, we're offering it at a discount. Now, TUI had 590 million or so shares in issue prior to this rights issue. The market value or the current cost, this is a bit subjective, but I've taken it just prior to the 8th of January, €4.90 per share. Now that gives them a market cap at that time of 2.8 or 2.9 billion euros. Then they're going to issue 509 million new shares, but they're going to issue them at €1.07 per share. So that's only going to put 544.6 million into their bank account. The company is now worth 3.43 billion euros. And we know that there's 1.1 billion shares in issue by the time all that's done. So by process of elimination, you're left with a share price or a TERP, theoretical ex-rights price of €3.12. Now that is very subjective. You can take a different number. You could take €4, you could take €5 to be that current market price. And I suggest you do that, a few variations, but it gives you an idea of the effect that the rights issue will have on the share price. So in this case, you're buying these new shares at €1.07. The TERP is €3.12. So it looks like a good deal on the face of it, but that's not all you really need to consider. Now, just remember the TERP of €3.12, that's not actually what the share price ends up being. It could be higher than that, it could be lower, because remember there are other forces in effect on the market. That doesn't take into account general trading conditions, it doesn't take into account if a vaccine rollout is really effective and things get back to normal quicker, it might stay a lot higher than that. If there's some bad news, if they have issues with vaccines, if they keep borders closed, then the share price could go a lot lower than that as well. It's purely the effect that the rights issue is having on the share price. Now, I will just point out that the TERP is very subjective. You're supposed to take a current market price prior to the rights issue being announced. Now, it was officially announced back in December, and as soon as it's announced, in some way it starts to get processed and priced into the market. So it's very difficult to know exactly what price you should use for the TERP. It is only an estimate, but it is good to assist you in your decision making. Now, in terms of your options here, you have a few. Firstly, you can buy the new shares that they're offering you, and you can do that at your discounted price. Now, that means if you owned 0.01% of TUI AG prior to this rights issue and you take them up on the offer, then you are going to own 0.01% of TUI AG after the rights issue. But in order to maintain that current holding, that current percentage holding, you need to introduce more capital to the company. The second option is to actually sell your rights, not sell your shares, sell your rights to buy new shares. Now, if you think about it, shares of TUI AG are currently trading at €4 something on the open market. You have the right to buy new shares at €1.07. So you got a €3 discount or so there. You, if you don't want to buy the new shares, can just sell your actual rights onto somebody else and they will take them up on the offer. The thing to remember with this though, if you held 10% of TUI AG prior to the rights issue and you do not take them up on the new rights, you are going to own a smaller percentage of that company afterwards. It means that you're going to be entitled to a smaller amount of their dividends. It means that you have a smaller claim to that company's assets. So in order to maintain your position, you have to take them up on the rights issue and introduce capital. If you're happy to let your position dilute to get a bit smaller, then you can just sell your rights. Yes, you lose a bit of your percentage holding of the company, but by selling the rights, you're also going to have some cash in your pocket. And then finally, the third option, technically you could do absolutely nothing. Now with newer, more modern platforms like Trading 212, that's not a problem. They'll just sell your rights. They'll make a decision for you, sell your rights and credit your account with the cash. If you're using a more traditional platform, I'd be a little bit careful with that. Depends on the rights issue, but if someone doesn't sell your rights for you, essentially, you could end up being out of pocket. So I'd recommend steps 1 or 2. Now, before I show you exactly what I'm going to be doing here, I just want to explain to you what I would recommend doing if you ever find yourself in this situation. And it helps if you just understand, first of all, because we have a liquid market, we can go and sell our shares very easy on the open market. We can actually go and sell our rights to shares very easy on the open market. So after it's all said and done, it doesn't actually make much of a difference. It doesn't really make much of a difference at this point in time, right now. If you sell your rights or you take up the new shares, the impact on your pocket in this instant is almost the same. It's not exactly the same, but it is almost the same because we have a liquid market for both the rights and the shares. Because if you think about it, if you take up TUI on their offer and you go and buy new shares for €1 per share, they're currently trading on the market at €4 per share. So it looks like you're making a €3 per share profit. Now, if you go and sell your rights on the open market, how much do you think you can sell them for? Well, it's about €3 per share. It's actually a little bit less because you have to take into account transaction costs and the spread, etc., the difference between the buy and the sell price. But there's not a huge difference in it. And that's because we've got a liquid market for both products. So it's not really going to make a big difference right at this second. There's no right and wrong answer if you're thinking about the impact on your pocket right now. The question really is, what's going to happen with this company? What's this company going to do with this money in the future? So you make your decision today, doesn't really make a difference either way, whichever way you go. But what that company does with that money in the future, as always with the stock market, that's what's going to make your decision potentially the wrong or the right decision. And I think you should be asking yourself 2 questions here. First question is, do you want to put more money into the market at this time? Not necessarily just TUI, but do you actually want to expose yourself more to the current market conditions? If the answer is no, then don't take up the rights issue. It's simple as that. You'll get compensated, you're going to get a cash amount from selling your rights, but there's no point in introducing money to the market just because TUI AG are asking you. If your answer is yes, then ask yourself another question. Do you think that the capital that TUI raised from this rights issue, the 500 odd million euros or so, do you think that will better position them moving forward to be a more successful company? If the answer to that question is no, then again, just sell your rights. If the answer is yes, you have more money to introduce to the market and you want to introduce more money to the market, you think that TUI AG will do really good things with this money and it's going to help them become a more successful, more profitable company, then take up the discounted rights issue. It's as simple as that. Those are the only questions you should really be asking yourself when it comes to a rights issue. Now, my position is I have more money to introduce to the market, but do I believe that TUI will be better positioned following this rights issue? I guess it will help them survive the pandemic, but there's also a lot of conditions attached to the loans that they've taken from the German government, so I think that could hinder them. They just seem to be paying off old debt with this. It's not as if they're moving into a new market or launching new products, it's just paying off old notes by the sounds of it. I still believe in this company. I will still continue to hold this company, but I will actually sell my rights to buy the new shares. I'll take the cash and I will invest it elsewhere, and then I'll let my TUI position dilute a little bit. It's also worth me pointing out that during this time, from the rights issue being announced until the rights issue actually taking place, which I think was the 26th of January, the market for TUI AG shares will be very turbulent. There'll be a lot of people seeing potential in that, and you can make a lot of money in it, but it's also a lot of risk there as well. There's a lot of information for the market to try and process, and that takes a little bit of time. Remember, every single TUI AG shareholder is either buying or selling at the moment. Simple as that. They're all in the market in one way or another. So there's a lot going on there. So just watch out for that. But it should all iron out by just after the 26th of January. As I mentioned before, you have to check with your particular platform, as they all tend to be a little bit different in terms of how you deal with the rights issue. What I can do though is show you with the gyro where I had to actually make the sale of the rights myself on the market rather than just letting them expire like you do with Trading 212. So I'm going to bring that up on screen and just run you through that very quickly. So this is how my DeGiro account looked once the rights became available. You can see my portfolio. I know it's not too clear, but you can see the portfolio on the top few lines: Shift Technologies, EasyJet, and then my TUI AG position. Those are the shares that I held pre-rights, 930 shares in this account. And then just below that, under the warrants section, those are the actual rights that I can go on and sell if I like. Just to demonstrate my point that there isn't a huge amount in it either way at this exact moment in time, whether you buy the shares or whether you sell the rights, you can see that I hold 930 shares, which would entitle me to 801 more if I want to take them up on the rights. In theory, I could buy those shares at 107 and then sell them at 430, well, probably 425, because that's the mid-market price showing there. That would leave me with a theoretical profit of 2,547 euros. If you then look at my rights down below under warrants, they are worth £2,200 or so at the moment. Once you convert that to euros, that's about 2,455 euros. So it's less than £100 difference, which is partly down to the cost involved in buying and selling. But again, you can see the immediate outcome is pretty similar. It's not actually until the rights issue takes place and then the market starts to digest what's happened, and until TUI start actually putting that money to use, that we'll find out whether selling the rights was a good idea or not. To actually sell your rights here, all you really need to do is click on the product itself under the warrants tab. Don't click on the shares, otherwise you're going to go in and sell your actual holding. Once you've done that, it's going to take you into the usual screen. Looks very similar to buying and selling shares in the normal way. Again, as usual, you can choose order types, whether it's a limit order, market order, stop loss, stop limit, etc. Select how many of those rights you want to give up. I want to sell my full 930, and then place the order, and that will release the 2,000 odd pound or so that it was that those rights are valued at. So in conclusion, try not to stress yourself too much about which option is going to be better for my pocket right this second. What you want to be thinking about is this rights issue a good thing for the company, or is it a bad thing for the company moving forward and looking to the future? That's how you should base your decision. That's all for today. Thank you all for watching, and I'll see you next time.